Morning, friends, and welcome to our special webinar, which delves into the intricacies of the RBI's report on trends and progress of this critical report unveils the pulse of our nation's financial landscape. And today, Sri Sundarajan sir will be dissecting its key findings with us. I asked Sundarajan sir to introduce him. To start the session, I will introduce him for the benefit of a student of economics and a very passionate student, I would say, of economics. He keeps on following the latest trends.
Of treatise. I mean, whatever RBI does it, we have to say it's all full of experience. So global banking development also get captured there. 2023, the trends and progress of banking takes into account the development that have taken place even after that period. Okay. Now, let me start rolling out the this one. Now, what it says, the trends and banks of banking. So when the banking system and the non-banking financial companies are good, they support the credit growth. It is not a credit growth, it is a double-digit credit growth itself. And then what it says, if you want it to be one time or you want it to be on a sustaining level. This report also comes out, as I already said, a broad brush view of the challenges facing the banking and non-banking sector, and also on the way forward. What is the way forward? We are going to discuss in the other slides. So I'll be focusing more on the challenges. As a elite bank club member, unsecured lending in banks and non-banks. That is, when I say non-banks, it is a NBFCs. So here they are taken into account 30th December 2023. What was the position as of December 22? And then they made a compare 20.1%. But if you see the personal loans grew at 28.5%. Credit card outstanding, ladies and gentlemen, it has grown by 32.6%, which is that they are going to come out with the policy measure. This is the review of income recognition, asset classification, and provisioning norms. See, RBI wants to move from the regulatory approach is going to be in future activity based. They are shifting from entity based to activity based. What is the aim behind this? The aim behind this is they want to give impetus to the resolution of the stressed assets. So, ladies and gentlemen, you watch out for the review. They are going to make a comprehensive review. They will come out with the guideline, put first for the draft approval for the comments, and then it will come out. So, you please watch out. So, being a elite club member, you are now aware of what is in store. Taking into account the requirements of the various stakeholders, they want to come out with this. So watch out for the guidelines on the interest rate and advances to harmonize the regulatory framework across all the regulated entities. And also you will be getting the RBI guidelines on the export credit in the days to come. Constituted to holistically examine and provide independent inputs on some of the technical aspects. So in the days to come, things that it will be catching up. Another important thing, non-fund based facilities, co-acceptance. I mean, increasingly compared to about 10 years, 20 years back, stress assets, it sought the comments from the market participants, again taking into account the novelty, complexity of the structure, and because it may cause a concern. There is a lapse in the governance, corporate governance. So it may ultimately affect the interest of the bank itself. And it is a moral hazard issues. So they may reduce, they may give, because for want of information on your land, I can discriminate you. with regard to the quantum that is made available to you, with regard to pricing that is made available to you, etc., etc. Now, RBI wanted to see, let us introduce a web aggregator of all loan products, which will entail the aggregation of loan offers from all the multiple lenders on an electronic platform. What for? This will enable the borrowers to make what is called informed decision making. They can always compare, they can choose the best available option to avail a loan. Offered by the lending service providers under a comprehensive regulatory framework. Ladies and gentlemen, see how it is undergoing a sweeping change. All along, it is only a thing, you have only limited information. Now, get a better product as a part of the customer service, this measure can also be attributed. So the framework is going to focus. See, NBFCs are playing a strategic importance. And then there is a high level of interconnectivity between banks and non-bank relationship, not only with the multiple banks. So something wrong happened to it, it will have an impact on various banks. And not only that, banks also subscribe to the debentures, commercial papers of the saying that we would like to meet your chairman and the members of the audit committee, obtain their independent views about this. Even the management personnel may be present there, no problem. We will ask audit. Are there any serious internal audits are coming? What is the trend of the thing? What is the trend of the fraud, etc., etc. That way, it is a better thing. Now, I was thinking, so I thought I share this thought with you. So, although the banks are well capitalized, they need to constantly evaluate. For the purpose of constant evaluation, this meeting the audit committee members will also be a worth the suggestion, worth looking into it. Maybe you can recommend to your controlling office if you are working in a branch. When they raise the resources, that should be broad-based. They should not resort to over depending on the bank funds. That way, they make it very clear. This trends in banking comes out with this. Then another thing, they have a huge impact. See, they have a huge impact on this. They are important. The GNBFCs or the government-owned NBFCs are important part of the sector. There is a concentration risk. RBI has started looking into this. And also, of all this exposure, all the 50 exposure were to the power sector extended. To GNBs also, except those in the base layer. Base layer means those which are with a AUM of 1,000 crore base, and then secondary, middle, top, like that they have. So the framework will become effective from October 1, 2024. My dear elected members, you will be well informed because you know very well from 1st October 2024, these guidelines of the PCA will be made applicable to GNBFCs. So wherever you have exposure to the GNBFCs, getting the shock of the life one fine morning. This is very, very important. Ladies and gentlemen, you may even get a question in the interview. Not only if the question doesn't get also, you should have it in the back of mind whenever you deal with the microfinance institutions also made a good killing. They made a good money. Their NIM are in the range of about 78%, etc., etc. So it's a two-way win-win situation. Is advising that there is a need to ensure the flexibility is provided to them, provided to these NBFC MFIs. They use it judicially, capacity of the customer to pay accordingly. You price and then be transparent in your interest rate. In the last monetary policy itself, it has said that you have to come out with even before this what are the terms in the form of a common this one. So that will also be, this is also getting reinforced here. This small finance bank. See, small finance bank is also forming part of the banking system. So there is a possibility of contagion risk passing from small finance bank to cooperative bank. So RBI want to alert when they were NBFC MFIs, what is the business model followed by them? They continue to follow even with when they turned into the branch level. A branch manager at a periodical level should meet all the staff members and then talk about this customer service. Now, of course, you have a date where the customers can come and meet. Many a time it is a paper meeting. They should provide what is that? They should have an empathetic approach because services will increase, products will increase, operations will increase. And we have provided the technology platform also. Many senior citizens do not know. And many banks, I'm sorry to say, gentlemen, even with regard to public sector bank, payment and settlement system. See, there is a payment vision 2025 system. Then next is the offline transaction near field communication technology. These are all how to make the technology, how to make the digital platform, how to make the payment settlement system effective, made available in both smartphones as well as feature phones based on UPI channels. Then processing mandate with a single block and multiple debits. This is also one of the areas for want of time. Ladies and gentlemen, please permit me to go bit fast. So these are all available in the thing. To create a trust, high degree of trust among the merchants. They are assured of the timely payments while the funds remain in the customer's account till the actual delivery of the goods and services. Empowerment is required. What they should do, what they should not do, etc., etc. Even today, if you go to the ATMs, people are standing in a queue, and when I operate, my PIN can be easily seen by my person who is standing behind me. They don't question anything at all. So when you are going to rely on the algorithms which are preset by the fintechs, whatever they say, so please keep on questioning. Please ensure that watchful of any undue risk that is built up in the system. So there is always, again, it talks about, regulator talks about trends and as a part of the trends and progress in banking. There is a potential risk of ethical artificial intelligence, which focuses on protecting consumers' interests, promote transparency, inclusion, impartiality, responsibility, reliability, security, and privacy. See what an exhaustive thing that the regulator has covered as a part of this. Capturing the essential information about the fintechs, including the range of service, the range of activities, product, technology stack, and financial information. Aid in designing appropriate policy and approaches. And the RBI would like to start, you need to centralize the monitoring and the analysis of the cyber threats. The sector can swiftly adapt to evolving to the preserving the financial stability while enhancing the efficiency in the financial system. And services, that is trade, is expected to decelerate to 0.9% in 2023 from 5.1% in 2022. Again, global energy, non-energy commodity prices are exhibiting high volatility. Crude oil prices also crossed US dollar 95 per barrel in September 23. In 2021, some of them have started cutting the rate. Brazil started cutting in August 23, etc. Russia and Turkey have reverted to monetary tightening. That way, different. China is pursuing a accommodative monetary policy. That way, different economies are responding in a different manner, etc. They also expose the weakness in the risk management strategies as well as regulatory and supervisory architecture. Now, related to proportionality in application of the prudential guideline. It says the how they do that is they capture the AI related uh, keywords in the Indian bank. It has increased sizably, especially in private sector bank. In public sector banks also, though the adoption is relatively muted, it has risen about 2.5 times over the sample period. Even private sector banks have already some form of chat box and virtual assistant using UA and machine language technologies. Most of the cases, chatbots are accessible through banks' website. Okay, monetary policy could stay in the restricted territory. That is what, as a part of the global economy, the studies, global growth is expected to weaken in 2024-23. Going forward, regulators and supervisors need to remain mindful of the emerging risks to the banking sector in a changing environment. At the end March 23, again, public sector bank accounted for 61.4% of the total deposit and 57.9% of the total advances from higher earning. Moreover, the asset quality improved, provision coverage ratio rose to 75.3% as of September, vis-a-vis the capital funds. CRAR of the scheduled commercial banks was 16.8% in September 23. And at March 23, all bank groups met the regulatory requirement of CRAR than 100% of 30 days net cash outflows. And as per the Reserve Bank direction, banks are required to constitute a risk management committee of the board with a majority of non-executive director. The chair of the board may be a member of the RMCB only if he has the requisite risk management expertise, and its unique open model has been a cornerstone of the transformation. Importance of DPI, the digital public infrastructure as a priority, and India's G20 presidency at the multilateral is expected to further aid its development, etc. The growth and volume of the total payment decelerated to 57.8%. What are the parameters in which the index is being is also captured? As at end March 23, the index stood at 395.6 as compared to subsidiaries. Things stood at 60.1 in March 23 as against 56.4 in March 22. Inclusion index. Again, it talks about how the balance sheet of the banks have done. Retail and service sector loans also driven the growth. Looking map, banks need to better recognize and address this technology and
for these two webinars and attended positively. And now I request Tangsale sir and Puri sir for their comments.
Primarily should help you knowing your ecosystem, that in what ecosystem you are operating. It tells you that how the ecosystem is going to behave, how the other players in the financial system behave, and thus if you do a SWOT analysis of your strengths, weaknesses where you need to improve upon to. Now on the customer service, let me tell you the kind of openness which is there now for bank. I think, I mean, in short, these are very, very important inputs sir has given. On the blockchain, you could share the statement of account and do the matching on a periodical basis, that whether all those credits and debits which are interbank have been properly used and there is no misutilization of funds. Tools which should evolve to have a proper, monitoring of the transactions in the account, particularly the transfer of funds interbank.
That you have already achieved for whatsoever reason, whether regulatory forbearances. Why I am telling one example I am giving, see, holding, then probably your profit will definitely come down. You will not have that kind of profit. And 3.8% net interest margin may not continue for the next year. Ultimately, they took a very strong decision. This is from the regulator side. Now coming to this regulation and supervision, banking system is in a better position. it is better to give them an opportunity to improve their efficiency. They should not depend on the regulatory forbearances. So the times to come, commercial banks may have to tighten their belt to improve their efficiency, adopt the technology in a better way, and redressal of grievances. See, redressal of grievances is no more an option. You have to do that.
Yes.
Can you please repeat the question? What the question?
Sir, I want to you people, some of you to throw some light on what is expected credit loss based framework which is going to be adopted.
Domain experts let us have, and then academia will let us know. Industry and the major banks also will have, and holistically we will examine and independent inputs.
Thank you, sir. Any more questions from the audience? You can just unmute yourself and ask the question. Go ahead.
Yes, sir. Good afternoon, everyone, and thank you very much for the great presentations and valuable insights. So I have two questions specifically, sir. One is for Sundarajan, sir. Sir, considering the cyber security risk, which is very much a top three risk at this moment segment, okay. And my second question is to Mr. Tankshale, sir. Sir, can you please again elaborate on that blockchain and the idea which you were saying what can be built for that thing?
Banking, as I have covered, the small finance banks exposure with the urban cooperative bank is very high. They will insist that thing, whatever the lessons that we have learned from the thing, footprints in the science of life, we can make use of it to ensure that it is smooth, empowered. Probably they may have to play an increasing role, saying that do's and don'ts, etc., and field has to do it. It's a Herculean task. I agree with you. It's an important question, lovely question. They need to do a lot and see that they also fall into this, because in the report, regulator keeps on saying that we are going to have an uniform approach on all the regulated entities. We are not going to take a soft corner approach with any of the entities, be it banks.
Suppose if you have transferred a crore of rupee to X bank for onward payments for XYZ purposes. Now, if you have an access to their statement of account, probably you can relate to your credit in the account and the subsequent debits in the account and verify. Don't take the benefit. I mean, to give a simple use case of the trade finance, where if you are putting your discounting documents on the blockchain.
So I don't see any more questions coming.
But, Arvind, you should give the task to all the participants. As I said,
Yes.
they should do their SWOT analysis. They should work out their productivity and efficiency numbers, compare it with what is there in the report. I think all that will
also understand what Tankshale sir and Sundarajan sir have been saying, and do some exercise at their own level, at their branch level or their administrative office level. So I don't see any more questions coming. So we come to end of this session.